Thank you so much for joining us today. My name is Ryan Hermansky. I'm the president of Private Money Funding. I'm also a co-founder along with Doug Daly, Tim Ernst, and Brandon Hermansky, who you guys will be meeting today. In a moment, I'll introduce our CEO and co-founder, Tim Ernst. His incredible background in lending and commercial real estate is truly the foundation that Private Money Funding was built on. We're also joined by Shay Roberts from Vantage. Vantage specializes in helping you take control of your retirement accounts. Shay will speak today on the process of directing your retirement funds to investments that you choose. We greatly appreciate your time. We'll keep today brief, informative, to the point. We'll also have a full Q&A, so feel free to enter any questions you have in the chat. Let us know where you're from, your name, and we're happy to get to all those questions today. I would like to start by introducing Doug Daly, our Chief Legal Officer. Doug, if you could chime in and please say hello and introduce yourself.
Sure. Good morning, everyone. My name is Doug Daly. I'm the Chief Legal Officer here at Private Money Funding. I've been practicing law for 20 years. I focus primarily on real estate and regulatory compliance law. What makes us unique is that we're in one of only a handful of states that requires regulatory oversight for commercial loans. We are licensed and regulated by the Department of Insurance and Financial institutions. They require minimal capital requirements, reporting requirements. We're required to have our books independently audited every year. We undergo examinations by the department of our books themselves. So we think that additional oversight does give investors an extra layer of confidence in our operation. And with that, happy to answer any questions that come up.
Thanks so much, Doug. Shay, can you pop on and say hello to our audience, please?
Yes. Hi, everyone. I'm so happy to be here. Thanks for having me, Ryan. I'm Shay Roberts. I'm the VP of Business Development for Vantage IRAs. And essentially, we are one of the leaders in our industry as a self-directed IRA custodian. Essentially, what that means is we custody IRAs that are specifically designed to allow you to invest outside of the stock market. So like a Schwab or a Fidelity or a Merrill Lynch that you might be familiar with, Vantage has the same government-regulated IRA that you might be familiar with. However, instead of limiting our clients to investing in stock market-based assets, we provide, we allow you to invest in everything private. So anything outside of the stock market, like real estate, private equity, precious metals, private lending. The list is pretty long here, but yes, that's essentially what Vantage does, and I'm really happy to be here and collaborate with you guys.
Thank you, Shay. Shay will be speaking in length here a little bit later. But before that, I did want to introduce everybody to Tim Ernst, our CEO and co-founder. Tim, can you say hello to everybody and give a little bit about your background, please?
Sure, Ryan, be glad to. Hello, everybody, and thanks for joining. Yeah, I'm Tim Ernst. I'm the CEO of Private Money Funding. I've been making real estate loans for many, many years with my private funds, actually a couple of decades. Well, I got started in the real estate business in 1979. I was a commercial real estate broker representing buyers and sellers of investment properties. And then several years later, I started raising money from investors to pool the funds and buy and renovate investment properties. And that led me into the development business, the real estate development business. But today, I'm far, far more conservative than I was when I was a real estate developer. In fact, at this stage of my career, I'm very risk averse. So I would way rather be on the lender's side of a real estate transaction than be in the owner's seat, because the owner absorbs the vast majority of the risk. So when an investment property loses a couple of tenants, then of course the value goes down and the owner takes the hit. But by making conservative loans, very low loan to value loans, the lender has nowhere near the risk that the investor has. So several years ago, I formed Private Money Funding with three very successful business people. And today, our portfolio averages less than 40% loan to value, meaning that we have lent out less than $400,000 for every $1 million of value in the collateral. And that type of security and safety really enables me to sleep well at night and gives us a good cash flow. But my many years of business years in the real estate business have helped private money funding grow substantially because we've received many referrals from brokers and others that I work with in the industry, and that's just a good way that we've been able to grow the firm. But when I first got started in the real estate industry, I volunteered for committees that were sponsored by the realtor organizations. And as a rookie broker, it was a great way for me to get to know really well the real movers and shakers in the industry. And then in 1992, I was elected president of the commercial division of the Phoenix Association of Realtors. 3 years later, 1995, I served as chair of the ethics committee of the Arizona Association of Realtors. And throughout my career, I continued to volunteer for these types of committees because real estate was very good to me. And this was one way I had to give back to the industry. And the relationships that I developed by doing that are still bearing fruit for private money funding, with many of the brokers that I worked with all those years ago on the committee referring opportunities to us. So that's a little bit about my background in lending and my background in the real estate business, and of course my affiliation with private money funding. So thank you and welcome.
Tim, thank you so much. I always enjoy hearing about your background. Tim's just an incredible asset to our team. We learned so much from him, and it's truly just what private money funding is built on, is his background and experience. Overall, you've met the team now. The point of today's webinar is to kind of give you a clear understanding of who private money funding is and how our investment opportunities work. And we want to make sure we explain what separates us from other investment opportunities you may be considering. We also want you to understand who Vantage is, and how Vantage can help you control your investments. Also, we'll walk you through the steps of investing with private money funding and explain how Vantage can get you through all those steps, which, as Shay will explain, can take some time. Private money funding is built on a foundation of paying out a 9% annual return that compounds monthly. You'll have the ability to receive a monthly payment or let it compound and grow. It's your choice. You make that decision based off what stage of life you're in. We've had people actually live off their investments by just receiving the distribution in their account monthly. And then some people let it compound and grow. There's no lockup period. You can come and go as you please. So there is no long-term contract with us. If you invest for a while and then decide you have a different investment opportunity you want to explore, you can withdraw your investment. There's no penalty to do that. There's no fees to do that. In fact, at no point do we have any fees. So when you're comparing our 9% annual return, make sure you're comparing it to what your broker's fees are and what they're charging you as well. We are a state licensed through the state of Arizona. We're registered with the Securities and Exchange Commission under Regulation D. As part of our license, we undergo an annual audit by a third-party CPA firm. We've deployed over $50 million in capital, and we lend mostly on commercial real estate with a few residential deals here and there. We are a very conservative lender, as Tim mentioned. We will not lend above a 60% loan to value. In fact, our company documents prevent us from anything above 60%, but our portfolio actually sits at 30% loan to value. So we've lent out $36.1 million, but that value, the cumulative value of all the property that we're using to protect your investment, actually is over $121 million in value. In summary, the key parameters of an investment with private money funding is you're in complete control. You have a 9% annual return. You can come and go as you please, and there are no fees. You've met the team already. If there's any changes you need to make to your account, you just reach out to us personally. That's who you'll be speaking with. I would like to turn it over to Shay with Vantage and let Shay talk about how you can direct your retirement funds and see if private money funding is a good fit for you as well. Thanks,
Yes,
Shay.
thank you, Ryan. Thanks. I love this strategy. Like I said before in the beginning of the call, I'll kind of recap what Vantage does, but we are one of the original self-directed IRA custodians that came onto the scenes about 25 years ago. We've been in business for 22 years at Vantage. We're actually the first um, alternative investment custodian to come into Arizona. So we love what we do. We're really passionate about empowering our clients. Ryan just touched on a few things and using that word control. That's really important because as a self-directed IRA investor, you are in the driver's seat. You're in control of your finances. So, in your retirement funds. So essentially what Vantage does is we custody IRAs, the same IRA that you might be familiar with at Schwab or Fidelity or Merrill Lynch. We have the same government regulated IRA, but instead of you being limited to only investing that hard earned money that you put into your retirement savings into the stock market, we allow you Advantage to invest in anything outside of the stock market, like exactly what Ryan just talked about. Lending, private equity, real estate, anything private, anything kind of the sky's the limit as far as what you're allowed to invest in. The government has always allowed us to invest in many, many assets, not just Wall Street based investments. The reason that most people don't know about a self-directed IRA, which I'll touch on in just a minute, like exactly what that term is. But the reason that a lot of people don't know about this, and this is a new concept, is that 50 years ago, is a little over 50 years, I guess now, 1974, when the government created individual retirement accounts or IRAs, when they created those for us, it was really for the sole purpose of incentivizing us to save for our futures when they realized that a lot of people were outliving their pensions or didn't have a pension. And Social Security certainly was not going to be able to take care of all of us as that life expectancy also started to grow. So they created these IRAs for us and dangled that carrot of the tax incentive there to really encourage us to save. Well, it worked. It worked. There's a $43 trillion in this country tied up in retirement accounts, whether it's a 401k from an employer, a 403b, a 457, or a Roth traditional or a SEP IRA. All of that money totaled up is about $43 trillion in this country. But the reason that the alternative, self-directed IRA isn't as rolls off the tongue so easily for people is that when the government created IRAs, the banks and financial institutions that signed up to be custodians to do that regulation, do the reporting with the IRS, they were all heavily invested in the stock market. So no surprise that the message that we've been hearing as Americans for 50 years is that in a retirement account equals the stock market. Well, that's not really the case. The government never said that we had to invest in the stock market. It was just the companies that were holding custody of our IRAs were telling us that. So, Vantage is here to help you, help empower you, and give you more control over your money. We feel that no one should care more about your money than you. I certainly feel that way. I worked really hard for the money that I put into 401k or my IRA. I feel much better going to bed at night knowing that I have control. I know exactly where my money is in the private market versus waiting for Wall Street to show me returns or having that fear of the stock market volatility. So Vantage is here to help you with that. So if you have a retirement account in any way, shape, or form, you can transfer any of your balance, whether it be a portion, maybe there's maybe that's the 200,000 that Ryan just talked about. Maybe you have that tucked away over at a Schwab. You can transfer that money over to Vantage and deploy that into private money funding without any tax implications or penalties. So the beauty of this, beauty of using your retirement account for these private assets is, as you know, the tax benefit as well. You can compound and really grow your retirement account a lot faster, and it becomes much more powerful than maybe just letting it work for you over in the stock market or in a CD. So anybody that has an IRA or an old 401k, I say old, meaning that if it's a former employer 401k, you can typically you can move that, either a portion or all of that balance. Again, no penalty, no tax triggers. It's truly just moving from point A to point B from one financial institution to the next. And voila, you now have control over that money, and you can deploy that into a strategy that you feel more confident that it's going to get you closer to your retirement goals, whatever those may be. So we're really passionate about exactly this, and providing you with all of these different strategies in the private market to really get you to your end goal, whatever that is. So really happy to support private money funding's clients. We have many clients here at Vantage who have moved their retirement accounts over from more of the traditional brokerages over to Vantage, and really see their money grow. So any questions you have also, I would say too, we can have a conversation here, but Ryan will provide my contact information. If you have any questions about how to explain this to a partner, or I can go through your personal financial situation as well. You can talk to me about what type of accounts you have if you have any questions about whether they can move and how it all works. But the mechanics are pretty straightforward in the sense that if you know that this is something you want to do, and you have that untapped funding source, which is your retirement account, and you want to deploy that into private money funding, then you essentially would just open an account with me. I would be your guide opening your account and transferring those funds over from the current custodian, and then deploying those into the fund. So start to finish, I always tell clients 3 to 4 weeks, give yourself. Doesn't always take that long, but just in case, we're kind of at the mercy of whoever your current custodian is and how quickly they want to move your money over to us. So about 3 to 4 weeks to start to finish to start the process. But it is very, very straightforward, and I kind of walk you through every single one of those steps. So happy to help.
Thanks so much, Shay. As I mentioned before, we are taking questions, and I've seen several pop in the chat. And Shay, while we have you here, I'd like to throw the first couple at you. They're definitely good Vantage questions. So the first question I'm seeing directed at you is the cost. Does it cost anything to work with Vantage, and how does that process work?
Yes, great question. We have very low flat fees. So I'll also cover kind of what our role is. So it makes sense as far as the fees go. We are not financial advisors. I want to put that out there. We're not giving legal advice, tax advice, or any financial advice. We are truly an administrator on your account. So we do the reporting with the IRS, but we are not selling you any products. We're not endorsing specific companies, or kind of pushing products to you like you might see at one of the more traditional brokerages where they're trying to sell you products like mutual funds and things like that. So Vantage is here is truly just the administrator on your account. We're here to guide you and educate you and make sure that all of your paperwork is filled out properly and reporting to the IRS. So with that being said, we have a $50 account setup fee. It's a one-time $50 account setup fee. And then we charge a $450 annual record keeping fee. And that covers exactly what it sounds like. We record the value of your account to the IRS. Any gains, we obviously would report that to the IRS as well. So it's a $450 flat fee per asset that you have under your IRA. And then a $175 transaction fee. So $175 transaction fee means when you purchase or sell an investment. So an example would be, let's say you sign an operating agreement or subscription agreement with this private equity fund. It would be $175 for us to purchase that through your IRA and send the funds out to that sponsor. And then when that pays off, or you sell that asset, it would be $175 on the other end. So that's really it. It's $50 to set up your account, $450 annually, and then $175 anytime you purchase or sell an investment. And it's not, I'll address this. I get this question all the time. We're not charging $175 every time money flow is coming in and out. So when you have those capital gains, dividends, or any interest coming into your account, we're not charging you $175 on that. It's truly just the start of the purchase of the asset and at the sell of the asset.
So very affordable to work with Vantage, and gives you the peace of mind that you're doing everything correctly, which ties in perfectly to our next question. Would moving any funds trigger any taxes or penalties? Hazel is asking if you could assist with that.
Sure, yes. So I end up saying this many, many times throughout my typical presentations, because contrary to belief, maybe there's misinformation out there from financial advisors or more traditional, financial professionals, even your CPA maybe. There is no trigger. There is no tax implication and no penalty. It is not, if you were to, let's say, move money from your Schwab IRA over to Vantage, it's not a distribution. You're not taking that money and taking possession over the funds. It's truly going from financial institution A to financial institution B. When you're doing a transfer, even from an IRA at Fidelity to an IRA at Vantage, there isn't even an IRS reporting there. It's truly just going from one institution to the other without you taking possession of those funds. So it's going from one tax deferred account to the other tax deferred account. So no triggering and no penalties. Same thing for a rollover, which would be, typically if you have an old 401k and you want to move any of that money from that old account, roll that over into an IRA, it's the same thing. No triggering, no tax penalties or anything like that. It's just going from one tax deferred account to the other. And your current custodian will report, okay, Hazel moved $100,000 from Fidelity and moved it over to Vantage. They're going to report that to the IRS. And then Vantage is also going to report to the IRS that, yes, indeed, Hazel did that, and we have it here under custody, and it's also now in a tax-deferred account, and it just washes out and balances out. So, yes, very, very important to know that it is not a distribution. It's truly just a transfer. Great question.
Thank you, Shay. Another good question, actually, from Zach. Zach is asking, what if you do not want to use retirement funds? So there's two ways to answer this question, Zach. I actually really appreciate you bringing that up. So the first thing is, as I mentioned, we have about over 36 million in capital that we brought on from investors. So people have invested with us that are earning that 9% we referenced. Only a couple million of that is actual retirement funds that has been brought to us by Vantage. So you can absolutely use any funds you want. There's no need to have to use retirement funds. And that goes both ways as well for Vantage. So if you want to use Vantage and direct retirement funds, they don't have to come to private money funding as well. We collaborated on this webinar just as like an educational tool. We want to let people know about private money funding. We want people to understand and learn that you can direct your retirement money with Vantage. So we do work together, private money funding and Vantage, but there's no forced relationship. You do not have to work with both of us. So if you want to speak with Vantage on other items and investing other places, please do so. And if you want to use non-retirement funds with us, that is how a high majority, almost all of our capital that we brought on is where it comes from. So Zach, happy to chat with you more about that, and certainly happy to take non-retirement funds. Tim, I had a question from John that I'd like you to chime in and answer, please. John is asking if we can elaborate a little bit more on the loan to value. His specific question is, what does 27% loan to value mean in practical terms? Can you elaborate a little bit more on the loan to value and how our loan to value protects his investment?
Loan to value, the easiest way to look at it is if you've got a 30% loan to value, that means you're putting out, say, 30, $300,000 for every $1 million of protection of value in the collateral. So the lower the loan to value, the more secure you are. So it's important, of course, to value the properties right. So we have a very sophisticated due diligence system to make sure that we're valuing properties right when we're deciding how much to loan on the property. But anyway, the loan to value is simply the percentage of the value of the collateral that we're willing to loan to an investor.
Tim, I got one more for you. Emma Smith just chimed in with a great question, and she's asking, how can you offer no lockup when most private investments have a 3 to 7 year commitment?
We designed this firm to create liquidity for our investors. So we have lines of credit with banks. And when an investor wants to extract some of their capital, they simply give us a redemption notice, and we are required by our private placement memorandum to return funds to that investor before we make any more loans, other than loans that have already been approved. So the next thing that we're going to be doing is paying that investor back. So we're bringing in funds frequently from new investors and from investors that are already in the fund. Any investor who puts the funds into the fund, we would pay back the investor that's looking to extract their funds. The other way, of course, is the line of credit. So far, we've had 6 redemption requests, and we've paid them all back within 2 days.
Thank you, Tim. Emma, to elaborate on that further, it's obviously tax day, funny timing, or tax week at least. But we had several people withdraw some percentage of their fund investment to actually just pay their taxes, and they'll invest more with us. And so we do see people come and go. We've had investors pull investments out to purchase a house. So that is how the fund is built. One additional thing is what separates us from other lenders in this space is when you invest with us, you're protected by the entire portfolio. You're not investing in any one individual property. That's what allows us to have the liquidity that Tim mentioned. Doug, I do have a good question for you here. And we have a question asking, what does it mean that you're state licensed? Can you elaborate on that a little further, please?
As I mentioned earlier, we're one of only a handful of states here in Arizona that actually is required to be licensed for commercial mortgage lending, meaning in most states, you can just start doing commercial loans. There's no a permit approval process or regulatory oversight. To become licensed, there's some basic minimum requirements you have to meet, including some liquidity requirements. Experience is a big one. There's a lot of rules in the administrative code that looks like this in really small type of record keeping requirements, liquidity requirements. And I think probably one of the biggest ones is your books need to be audited. So rather than saying, hey, just trust us that the fund is what we say it is, we are required to actually have an independent CPA GAAP audit every year that needs to be filed and approved by the state. So to me, the biggest difference between licensed and unlicensed is you really have an administrator looking over our shoulder, confirming what we're saying is true actually is.
Doug, appreciate that. I think we've answered our questions. I did want to just wrap up by thanking you for your time. We greatly appreciate you logging in, learning a little bit about Vantage and private money funding. Obviously, we're talking about investments, which is a highly personal conversation. We would love to chat with you in person about that. We're going to put some information up on the screen so you can reach out to us. We'll also follow up via email just so you have our contact info. We'd love a few minutes to chat on the phone, answer any more specific questions. But thank you so much for attending, and we look forward to chatting with you in the future. Shay, would you like to say goodbye?
Yes, thank you. Thanks everyone for tuning in. We are very passionate about financial literacy, and I love it when I see so many people logging in and taking that step. We're all so busy in our lives, and so to take the time to invest in yourself. That's really what this is about, is you're investing in yourself. We would obviously love to help you. If you have any questions about diversification, that's a really great strategy. I meant to touch on that earlier, that if you have any questions about diversification, what those options are, or how the mechanics of the self-directed IRA work, I would love to chat with you. I'm happy to do a private Zoom or a phone call with you or your family members and really kind of look at what your options are. So happy to help, and we'll share my contact information in the email. Thank you.
Thank you, Shay. Well, thank you for joining us today. We greatly appreciate it. And we'll certainly be sending out some information so you can stay in touch. But we're going to sign off. But thank you so much for your time.
Thanks, everyone.